Okay, let's dive into one of the biggest, most exciting moments in any company's life. Its initial public offering. The IPO. And really, it's so much more than just a financial deal. It's the moment a private company finally steps out onto the world stage. For investors, well, it can be a massive opportunity.
But that makes you wonder, right? Why would a company, after years and years of growing behind closed doors, suddenly decide to open up and sell its shares to literally everyone? What's the thinking behind that move? Well, let's get into it. When you peel back all the layers, the decision to go public almost always boils down to one powerful thing: the burning need for huge growth. But it's not just about getting bigger for the sake of it. No, this is a super strategic move with some very clear goals in mind. So the reasons are kind of a mix of offense and defense. On the offensive side, a company uses an IPO like a giant fundraiser to expand its business. We're talking building new factories, launching new products, the whole shebang. Defensively, it's a great way to clean up the balance sheet by paying off old loans. But it's not all about the cash. Going public is a massive marketing event that puts your brand on the map. And maybe, most importantly, it's payday for the early believers. The founders and first investors who took a huge risk and can now finally see a return.
So all of these motivations, they all lead to this one single pivotal event. But what is an IPO, really? Let's break down what's actually happening.
Here's the absolute key. An IPO is the very first time a private company sells its shares to you, me, and everyone else. It's a complete transformation. The company goes from being owned by a small group of people to being publicly owned. And boom, its shares are suddenly trading on a stock exchange where anyone can buy or sell them. It's a total game changer.
But, getting from a private company to a public one doesn't just happen overnight. It's not like flipping a switch. It's actually a really carefully planned, highly regulated, step-by-step journey.
Yeah, think of it like a major expedition. The company has to hire financial experts to be its guides, and it has to get the green light from market regulators, the watchdogs who make sure everything is fair and transparent for all of us investors.
And this is pretty much the roadmap they follow. First, they bring in investment banks to manage the whole process. Then comes the paperwork, a huge, detailed document filed with the regulator, SEBI, that discloses everything about the business. Once that gets approved, the IPO dates are announced. The offer then opens for just a few days so investors can put in their orders. After that, the shares are handed out, and finally, the big day arrives. The stock officially starts trading on the exchange.
Now, one of the trickiest, most critical parts of this whole process is figuring out the price, right? How much is one piece of this company actually worth? Well, there are two main ways they figure that out. So you've got two main flavors. With a fixed price issue, it's simple. The company just sets one price, take it or leave it. But the much more common way these days is called book building, and it's a bit more dynamic. The company offers a price range, like say, somewhere between 10 and 12 bucks. Investors then bid what they're willing to pay. The final price is then set based on all that demand, which is actually a really clever way of letting the market itself decide what the company is worth.
Okay, we've talked a ton about the company's side of the story, but let's flip the script for a second. What about you? How can you, as an investor, actually get involved and become a part of this journey?
Getting involved is actually way more straightforward than you might think. You'll need a Demat account, which is basically a digital wallet to hold your shares, and a bank account linked up for payment. Then, you can apply right through your broker's app or your bank's app. It's all digital. But, and this is a big but, always remember, investing in IPOs can be risky. The stock price can be super volatile in the early days, so it is absolutely crucial to do your homework on the company first.
So, there you have it. We've traced the entire story, right from a company's initial dream for growth, all the way through the nitty-gritty process, the pricing decisions, and even how you can get in on the action. You've now seen the full path a company takes to make its grand public debut. So now you have the essential playbook for understanding an IPO. The next time you see a company in the news announcing it's going public, you'll know exactly what's going on behind the scenes. So, the only question left is, which company's journey are you going to follow next?